Today is January 28th, Sunday, January 28th. My name's Ara, and this is Rosara's Investments. This is earnings week, and one of my favorite companies is going to be reporting this week. I believe they are reporting on Wednesday after the bell, after 4 p.m. So, this is a company that I've made a good amount of money on. It's Facebook. And as you can see from the stock chart on your screen, this is one of the sexiest looking stock charts ever. So this is a 5-year chart, and let's see, 5 years ago it was around $29.64, $29 and change. 5 years later it is $190. Now I did not own it this whole time, but in 2017 I have profited from it. So let me zoom in and look at the 1-year chart of this company. And we can see some ways that I profited. So first of all, I'd like to point out that this chart is kind of a straight line. As far as stock charts go, this is very, very sexy. You want your company to be trending up and to the right. So Facebook seems like at a high point over here is like 173, down to 165, then 173, then down to 161, 176. So what I like to do to kind of look at the support line is I like to look at a series of higher low points. So its low point, for example, over here back in July was 147. Then the low point was 162. I'm looking at the right side where it's in white and with a black background. So over here, so it's 148, then it goes up to 162, goes up to 169, goes up to 170, goes up to 176, and 177. So each one of those low points is higher than the previous low point a month or 2 months ago. So this is a good sign, which means that every time Facebook, the stock price dips down too low, investors jump in to start buying at a certain point. And just like it has a series of higher low points, it has a series of higher high points. So here it was 172, then 173, then 183, 183-ish, about 187, and now about 190. So now you don't have to be a professional stock trader to see that this is trending up, and this is something that I love to see. So the times that I bought this stock was I bought options every time it dips down about 10 bucks. And I'm not going to get too technical with the analysis, but as you can see, if you were to buy the stock at 163 over here, it's a great time to buy. If you're to buy it when it dropped from 176 down to 170, it's a great time to buy. How about when it dropped from 182 to about 171? That's a great time to buy. It dropped about 10 bucks. Over here, dropped from 180 to about 175, great time to buy. Again, in my most recent options trade, it dropped from 187. Zuckerberg said he was changing the algorithm, and it dropped to about 177 or 178. And I bought, I think, 2 options right here at about 178 and another half an option. Me and my buddy, we went half on an option right over here at 178. And we did cash out for me and my buddy, we cashed out for $800 profit, and the 2 options that I owned by myself, I made $400 and $500 profit. So Facebook has been a very consistent source of income. So the way that I'm making money is because I can predict what the stock is going to do. Every time it goes down, it goes back up. And overall, if it doesn't go back up right away, I know that the stock is trending up, so eventually I will make money. Now, why is this so, and why do I do this with Facebook? Let's see. So I'm going to scroll down a little bit and look at the earnings, and I'm going to zoom in on the earnings. Okay. So this is a very nice visual for how Facebook is earning. So first I'm going to look at the annual earnings and see how Facebook is doing over the years. 2011, 43 cents, then 53 cents, then 88 cents, then $1.77, then $2.28, then $4.23. And 2017, which includes the Christmas quarter that hasn't been reported yet, it's a question mark. We don't know how much they're going to report. But obviously, anyone can see the trend with their own naked eye. Facebook is earning more and more money. So one of the reasons is because they are selling more and more advertisements. Let's zoom in and look at the quarterly earnings. This is 2014, 2015, 2016, 2017, and 2018. So as you can see, they tend to make more and more as the year goes. Then in quarter one, they earn less than the Christmas quarter. And then they start all over again and earn more and more and more and more. So here we are. Last quarter, they earned 159. And this quarter, analysts are guessing they earned 195. So this is significantly higher than they earned quarter four last year. So to go from $1.41 last Christmas quarter to $1.95 this Christmas quarter is a significant improvement. And I can't do the calculation off the top of my head, but I think that is about 35% or so, if I'm right, give or take. Let's see, that's 54 cents, which is over 1/3 of this. So yeah, well over 35% earnings growth. And another good thing is that in quarter three of this year, they actually made more than the Christmas quarter last year. They made 141 and it went up to 159. And people don't compare things like that, but this quarter, which wasn't even the Christmas quarter, made more than the Christmas quarter of 2016. Look at this. It went from 141 all the way up to 159, and we're not even at the Christmas quarter yet. They're going to earn 195. So this company, I'm predicting big things. So if we can scroll down a little bit more, if we add the last four quarters together, 159, 132, 104, $1.41, we would get a number, and that number would be their earnings. So the amount that they're earning times 35, that would be their stock price. So Facebook is trading at 35 times earnings. But if we were to look at the forward four quarters, Q4, Q1, Q2, Q3, and these are estimates, no one knows for sure what that will be, but we can take a pretty good guess because Facebook has been so consistent. If we were to do the price of the stock divided by this forward earnings, we would get a multiple of only 29, as we can see here that I'm having a hard time clicking on. So Facebook is more expensive than the overall market using these metrics. It's 35 times earnings if we're going to use current earnings, and if we're going to use forward earnings, it's 29 times earnings. But the reason is because of this incredible growth. Anyone can see with the naked eye that Facebook is earning more and more money. Revenues are going up, earnings are going up, and on top of that, look at this. Let's go to their financials and take a look at their balance sheet. So their balance sheet, let's see how sexy this is. Let's look at their most recent quarter. I won't go too in depth. So this is in billions, and the last time they recorded was September 30, a couple months ago. They have $38 billion in cash, right here. $38 billion, $289 billion in cash. That was as of a couple months ago. And they're adding to it every day. So $38 billion in cash. And let's look at how much liabilities they have. Their debt, right here in this line, long-term debt. Look at this. 0, 0, 0, 0, 0, 0, 0. They don't have any long-term debt. So these are the two most important numbers I look at when looking at a balance sheet. Of course, there are other types of assets and are other types of liabilities. Their total assets are in the over $70 billion. But in general, it is good to not have any debt. They don't have any long-term debt. They don't have any long-term obligations to bondholders. So that is terrific. So their equity, which is as a shareholder of the company, if you own shares in this company, your equity in the company is $71 billion. So that is terrific. Facebook just has so much cash on the books. So the fact that their balance sheet is so extremely solid, they might have the most solid balance sheet of any company in the world, And the fact that their earnings are going up, 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 that makes this a company that I would not mind holding for the long term. And as always, I put my money where my mouth is, and I did buy shares of this for my daughter, and I have bought shares of Facebook for other people in my family. Oh yeah, and I forgot, I actually own $6,000 worth of Facebook myself. When I sold the options, I did not sell my shares. I'm going to continue to hold the shares for a while. And I do encourage everyone in my family to be long-term investors, and when they buy a company, plan on holding it for 20 years, 30 years, 40 years. And this does seem like a good, solid choice because of their incredible, phenomenal balance sheet and because their earnings seem to be going up, up, up. And if you know anyone that owns a restaurant, like my buddy owns a pizza restaurant, I got some people that own bars, and you just basically have to advertise on Facebook. I mean, what other choices do you have? Nothing can get you that same return on your investment as when you make a post on Facebook and thousands of people see it. If you're a local business, that's definitely the best choice for you. So that was one of the big reasons why I decided to invest in Facebook. And again, the reason why I trade, which I don't recommend people trade, but the reason why I trade Facebook as a short-term trader is because this chart is just so predictable. It goes up, then it goes down, then 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 it goes up, then it goes down. It's just super, super predictable, and this has been a source of a big portion of my profit for 2017. I probably made over $10,000. And to be honest, making $10,000 is actually disappointing because this chart is so predictable. I wish I actually took more risks when it was down here, when it was down here. Anytime I had a big drop, even recently, I wish I took more risk and I bought more shares. But at the time the stock goes down, you are a little bit worried. I'm a little bit worried. Some people aren't, but anyway, if anyone is interested in what I do and how I do it, this is a great example of what I do. So thanks for watching. Please subscribe. Please share.